All right, guys. Sorry, I muted it. What's up? What's up, Dot? What's up, team? Um, all right, guys. Give me 1 second. All right, chat. Here we go. So we are writing our summary of the market today. All right. So the weekly jobless claims report. So today in the market, we'll put this at the bottom of the screen. So today in the U.S. stock market, fund strats predicting a 4% rise in the S&P 500 for June, driven by bullish trends, continued disinflation, and low investor leverage, significant cash reserves ready to be invested, and a strong corporate earnings, particularly in the AI sector. Today, we also have the weekly jobless claims report due at 8:30 Eastern Time. NVIDIA's earnings report has bolstered market confidence, encouraging investment reallocation into stocks. And again, we do have the jobless claims report due at 8:30 is anticipated to reflect stable labor market conditions. Upcoming inflation data includes April's core PCE and May CPI. It's going to be pivotal in shaping Fed policy and market reactions. So, yeah. You know what time the EC do we do? Is the ECB rate decision today? Let me check, bro. I haven't even looked. Hold on, let me see. Yeah, so the ECB decision is at 8:15 Eastern Standard Time. We also have the Challenger job cuts as well. ECB press conference is at 8:45 market time, but it's at 8:15. They are expecting a 25 basis point cut, so they're cutting rates as well. Yeah, let me get the music up here. My bad. It's not my company, Justin. It is Chart Prime. You can find the link to it in the description. Remember, they're a sponsor of mine. I'm biased in their favor. They pay me money. I'm biased. Check everything with them. But I like using them. But yeah, you can find them in the description, brother. Yeah, Nvidia, guys. GameStop over 30s. That's an optimistic thing, I think. Look at this run for GameStop yesterday. Nvidia is sitting at 1240s. So Nvidia is looking strong. If we look at the broader market right now, like the SPY or the Q. SPY broke lifetime highs yesterday as well. Got up to 535s. Crazy. Crazy. Yeah, Lululemon. Honestly, remember yesterday I was talking about buying Lululemon. I said I was gonna wait for earnings, but I should have bought it. Again, it was just down so much, man. It's just down so much. And again, I really was talking about buying Lululemon yesterday. I should have. You know, again, it's a healthy company that's been beaten down. It's kind of my recipe for investments, although I don't trust it long term. But yeah, oh well, it's all good. Yeah, so look at the stocks. You got the SPY on the right, Nvidia in the middle, GameStop on the left. I don't know. I don't think we're gonna cut rates anytime soon. I hope we don't, at least. I think it's way too early. I think it's way too early to start cutting rates. Yeah, I mean, Justin, it's not about sending a message to them. You sign up through the link in the description, and then they're gonna send you. You'll have to input your email address, and it'll then refer you to log into your trading view account, and then once you're there, you'll have access to it. Once you sign up for that and set up your trading view account, you find them here. Like, look, so you find those indicators here, brother. So you're gonna go to the indicator line up here, right here, and you're gonna click it, and you're gonna go to invite only, and under invite only, you'll be able to see these 5. The ones that you see me using on stream are the market oracle and the market dynamics. GameStop back over the VWAP though, so that's good. What do you think about a Fed rate cut decision? Fed will cut or not? I don't think we should cut. Now, I don't think we should cut this year. I bought Lulu yesterday and enjoyed gains. Yeah, I mean, I thought I might want to buy it, but it's too late now for me. It's okay. What a throw, dude. Laser tattoo removal. I've seen a video of it online. This dude had a lot of work done. I think that's a bad idea. All right, guys. Jobless claims is tomorrow right now. Jobless claims is today. Payrolls are tomorrow. So today is jobless claims unemployment filings. Tomorrow is non-farm payrolls and unemployment data. So, yeah, I mean, Abercrombie and Fitch does not look good to me. I don't care what the analysts say. I don't care what the outlook is. I all I know is that it's up way, way, way too much relative to how much the company earns. Okay, like look, this is Abercrombie and Fitch. Take whatever analyst pump nonsense they want to talk about and look at specifically their revenue. Abercrombie and Fitch's revenue. Okay, Abercrombie and Fitch's quarterly revenue has been the same since 2010. And I think that's a hard thing to do with inflation and everything else, right? With inflation, like their revenue really kind of going down a little bit, even with this last spike, is a bad sign, right? That's number one. They might have messed with their margins a little bit and helped them. All I know is every time I go in Abercrombie, nobody's ever there. Nobody's ever there buying clothes from Abercrombie and Fitch. And when I go there, the clothes look pretty plain. Like there's nothing on the clothes. Like I know they hated the culture of the company before this, where they used to be like preppy clothes, like really, really preppy like clothes, like dudes with shirts off, with techno music and stuff, and they probably hated that culture, so they tried to go all the way to the other end of it. The problem is that their clothes are so plain now that nobody wants to shop there. Like nobody's ever there. I don't ever see anybody shopping in Abercrombie and Fitch, and so it's something that like I don't know, man. It's something that I can't imagine they're gonna succeed long term. I know it's not the old company, but it's not about like whether it's the old company or not. It's about how many people are ever in the store. I don't see anybody ever in that store. You know, like I get a lot of people might have been sold on this pump because it's up ridiculous percentages. This thing is up from $31 a share to $172 a share. That's it went up to almost $200. Like a crazy run. It's almost certainly not going to hold, and I'm sure they're trying to talk people into it holding. Like, yeah, this is going to hold, guys. I seriously doubt it will. The only way it's going to hold is if it's straight up manipulation for this company, because they just don't make enough sales to justify this price point at all. Like $200 a share is a ridiculous, is a ridiculous price point. I think for this company. Again, just me personally, do whatever you want to do. Yeah, I'm looking at their numbers, Pat. I'm not talking about, I mean, again, you can take every other metric out of context. I'm talking about straight up revenue. This is their 10-year revenue. Like, this is their revenue over the last 10 years. Their revenue has not gone up at all over the last 10 years. And that makes sense because it's freaking Abercrombie and Fitch. Nobody buys from them anymore except for a very niche set of customers, right? I don't care who buys online. It's a very niche set of customers. Like, people in the U.S. don't wear them anymore. That's number one. They just don't wear them anymore. Number two, their revenue hasn't increased in 10 years. And think about how much inflation has happened over the last 5 years. For their revenue not to increase at all is a terrible sign. A terrible sign, Okay, hey, listen, we can agree to disagree, Pat. Hopefully you don't judge me too much for disagreeing with you. Like, again, they can predict whatever they want for the future, and that's fine. I just don't trust them. I simply don't trust them. I think they're the company. Nobody ever shops there. You can get a really good idea of how many people use them by going into the mall and just straight up looking in their stores. They're empty. So for a company that's pushed up, just over the last year, almost 500% just in the last year, for a company that's been pushed up almost 500%, to go in the mall and never see anybody in those stores is a problem. It's a problem. Tesla, yeah, I mean, I see Tesla moving up. Nvidia's up a lot right now. And again, we can agree to disagree. I might be wrong. I'm not even saying I'm right. I don't know. I don't trust them enough for me to buy them. That's for sure. Again, because Yeah, again, it's just not for me. It's just not for me. It's up way too much. So the extension, even if it was a healthy company, the extension of being up almost 500% in the last year tells me I don't want to buy it. Even if it was the healthiest company in the world, I'm not about to buy it because it's up 500% in the last year, and that's a sucker's buy. To be honest, for me personally, I'm not saying you're a sucker. Buy whatever you want to buy, and maybe you're right. I don't know. You might be right. I'm not buying it. Number two is that I remember what Abercrombie was before, and I know nobody goes there anymore. Nobody buys from them online and retail anymore. And so I don't know where this surge of online buyers are coming from. I don't know what's propelling them to go up 500% in a year, especially when nobody's ever at the stores. I just don't trust it. I just don't trust it. It could be manipulation, to be honest. And I think it seems that way to me. So the analysis is that you see no people in the stores. I mean, is that the only thing I said? You know, I mean, look, y'all can like Abercrombie. Do whatever you want to do. Listen, I'm not mad. Buy whatever you want to buy. We can agree to disagree, and I might be wrong. I certainly could be wrong. My analysis is that their revenue hasn't changed in 10 years. 10 years. That's a hard thing to do. With how much prices have gone up and how much the stock market as a whole has gone up in 10 years, for their revenue to really be kind of down over the last like 5, that's a very difficult thing to do. Like a very difficult thing to do. Their revenue hasn't changed in 10 years. Nobody's ever there when I go into the store and it's up 500%. And so I personally think that's too much risk. You know, I think there's too likelihood of a correction. But maybe I'm wrong. Earnings growth year over year is up 12,000%, John. What earnings are you talking about? Are you talking about margins? Their margins might be up, but that doesn't mean they're making more money. You know, like I think that's the thing. No, I understand Abercrombie and Fitch. Yeah, it's all good, man. Listen, y'all can buy whatever you want to buy, and I really might be wrong. I don't know. There might be something I'm missing here. For me, any stock, even if it's freaking Apple or Amazon, any stock that's up 500% plus in a year means that I'm probably not about to buy it. You know, it just means I'm probably not about to buy it. And so if it's Abercrombie and Fitch, I'm definitely not buying it. That's my take. Yeah, so you're talking about EPS, right? Yeah, so they fix their margins, and that's great. They probably shut down stores to fix those margins. You know what I mean? Like, I'm being honest. They probably closed stores down to fix them because that's what they needed to do because nobody was buying from their stores, you know? So I'm sure they were able to fix their margins a little bit by closing stores down. And that's not a shock, to be honest, either, you know? I'm sure their EPS is solid. You know, let me look. Yeah, I mean, listen, their margins are better, you know, their margins are better, but again, they're not that much better. You know, they're not that much better. They're kind of like look, and these are margins. Remember, guys, these are margins. This is the last 10 years of their margins, right? So yes, they are better the last 4 quarters for sure. So they tweak their margins the last 4 quarters, and that's great. You know, that's great. They're up 500%. I'm not really messing with them, you know. GameStop now under 31s. Under 31s. What do you think of Krispy Kreme here? Krispy Kreme. I mean, I love Krispy Kreme donuts. I get sick if I eat a donut. What is it? D-N-U-T? Yeah, D-N-U-T. But with that said, it's hard for me to bet on a company like Krispy Kreme publicly. I'm very selective with what I buy in stocks. And again, I'm sure a lot of people are going to be buying a lot of stuff that I'm not buying, and they might be right as well. Like, I might be wrong. Maybe I'm too rigid in what I buy. There's some rules that I follow when I buy anything. It needs to be it needs to be an established, healthy blue chip company that I think has a future in technology. And I don't think D&UT is that. I love donuts. I'm from Louisiana. A warm Krispy Kreme donut is the best donut you ever had. I just don't know if any donut companies should be public companies. I just think it's an unstable business, for lack of a better word. And I think there's a lot of competition for donuts and coffee specifically. So usually companies that I'm willing to invest in, a lot of tech companies, stuff like that, like Home Depot, you know. Yeah, it's mostly a southern thing. Yeah, so I asked AI about Abercrombie, and it said you might want to reconsider buying Abercrombie stock due to several factors. Firstly, analysts predict a potential decrease in the stock price, with an average target suggesting nearly 10% drop from current levels. Despite recent gains, this indicates limited upside potential. Secondly, while the company's revenue and earnings have shown growth, there are concerns about sustainability and market volatility. Additionally, the broader economic outlook and retail sector challenges could pose risks to future performance. Yeah, no, do your thing, Impat. It's all good, brother. It's all good, dude. Like I said, man, I'm really not trying to knock anybody's stock, right? Like, when anybody asks me about a stock, I really just try to be honest about my own biases and my own likes and dislikes about the company. And like, for Abercrombie and Fitch, for my type of system, right? I just don't see much that I like there. It's up a lot. It's up 500%, man. In the last year, that's the biggest reason I'm like, if it was like Apple or something, maybe I might take a risk of buying a stock up that much. But if it's up 500% in the last year and the revenue has stayed the same, it's really hard to get me to buy that company. It just kind of goes against my system, which my system works as well. Again, I'm up thousands on the year in my system too. I can't knock anybody's systems. There's tons of systems out there, so it's all love. It's all good. Like, I get it. But for me, it's up 500%. There's never anybody in the stores. Revenue has stayed the same. Just the base extension there for being up 500% in the last year is too much for me. Now, maybe over the next few years it dips and corrects and comes back. I don't know. It's a turnaround story. Not everybody knows that. Yeah, but with revenue staying the same, though, look, earnings, EPS and earnings can be fixed. Margins can be tweaked, right? But what it doesn't mean, if revenue stays the same, what the increase in earnings doesn't mean is that the company is growing, right? That's the biggest sign. The company hasn't grown in 10 years, right? That's the outlook that I look at. Is the company growing? There's a reason most times when you look at stock market reactions, EPS is okay, but what most people are looking at in terms of like the sentiment from earnings is revenue. Like, was revenue higher or lower than expected? Was it higher or lower than last time? And I think that's the big thing that you want to look at with earnings. No, unemployment data is today, or unemployment data is tomorrow. Today we have jobless claims unemployment filing. So this is a weekly report on how many people are filing for unemployment. Yeah, Crocs is a story too that nobody believed in. So hey, listen, maybe he's right. I don't know. Crocs. The funny thing about Crocs is that Crocs was used in the movie Idiocracy, and the premise of Idiocracy is that, for lack of a better word, the premise of Idiocracy is that the less intelligent people are going to reproduce faster than the smarter people. The smarter people are going to be more careful about reproduction, and so over time, it's going to cause an exponential growth in the less intelligent. Is the premise of the movie Idiocracy. And so basically, what the movie implies is that the future is dumb, right? People in the future are dumb, basically. And so when they came time to pick shoes out for the movie Idiocracy, they picked a relatively small company that nobody had ever heard of at the time, of these ridiculous looking shoes that they would imagine dumb people from the future would wear, right? And those shoes were Crocs. The brand Crocs was the shoes that they wore in Idiocracy to imply that dumb people wore them in the future, right? And the hilarious irony there is that in the future, everybody's wearing Crocs. It was a real thing. It accurately predicted what people were about to wear. And so Crocs is now a freaking multi-billion-dollar brand and one of the biggest shoe companies in the world now. Public company as well. If you look at Crocs as a company, Crocs has grown massively also. Like, look, here's a weekly chart on Crocs. It's at $150 a share. Multi-billion-dollar company now. So... Is AI a bigger deal than the internet? I don't think it's a bigger deal than the internet. I think without the internet, you couldn't use AI. Nvidia breaking over VWAP levels here. Look at it. GameStop ripping up with it too. Yeah, I'm not gonna say it's bigger than the internet. I don't think it's more useful than the internet is either. I think the internet, in terms of like net change in the way people query information, is really what it is, and so I think AI is crazy useful and powerful. I don't think it's bigger than the internet though. Survival of the fittest no longer applies. Now more likely survival of the wealthiest. Yeah, but I would argue that generalized, it still fits, you know? Like, now it's the same thing. Like, fittest doesn't mean the strongest necessarily. Fittest just means the most fit to survive. Right? Survival of the fittest just means it's the most fit to survive. It doesn't mean modern definition of fit, which just means like in good athletic shape. Fit just means the most fit to survive, right? And so I would argue that it's still very much true Darwinism, survival of the fittest, whatever you want to look like, whichever definition you want to give to it, essentially means that what it really means is that the less fit people to survive will take themselves out of the race over time, right? The strongest, the most fit wins, and not strongest in terms of athletic strength necessarily, but more so in strength of mind and strength of ability is what it's really referring to. Well, no. Well, the whole movie in general, Blaze, goes against Darwinism. The whole movie goes against Darwinism, I would say. And I don't know if that movie's necessarily true or not. I think if you look at, I don't know if that movie's necessarily true or not. I think the reason that movie was like, I think new cultures, I think there can be a shock factor with each new generation, right? Like essentially like what we're doing in my generation, right? I grew up in the 90s, early 2000s. I played video games a ton. The language and slang that I used and I still use is much different than somebody that's 60, 70, 80 years old today, right? Like they're going to look at my generation like we're less intelligent, right? But that's not necessarily true. If you look at the technology that my generation and the generations above and below me are producing, it certainly doesn't mean we're less intelligent. It's just a different culture. It's a different generation. Right. And so I think the movie Idiocracy, what they see is they see just different cultures. That doesn't necessarily mean the people are less intelligent. Right. And I think they're extrapolating that to mean that each succeeding generation is dumber and dumber. And I don't think that's true. I think it's the opposite, to be honest, especially when in terms of like technology. But yeah, NVIDIA push it up. It's at 1240s. Yeah, well, maybe I misinterpreted your comment then, Blaze. All I was trying to say is that I believe survival of the fittest is still true. I feel like the less fit people are still eliminating themselves from the competition still today, and I think, I think that's essentially true. The writer was mathematician. That's a high bar. He probably thinks everyone is dumb. Yeah, I mean, that might be true too. Yeah, you might be right. I mean, again, I get it. Yeah, fit means capable. That's what I was trying to say. It doesn't mean athletic fit. It's always meant capable, and I think capable and wealthy can be swapped in and out, because it's similar. Not always though. Sometimes you got some really dumb wealthy people. I mean, a lot of people would, think that that's me. Yeah, and that's okay. Oh yeah, Darwinism happens though. You see it a lot too. Good morning, John. Friends, what's up, Freddie? Yeah, the plants need more Mountain Dew, guys. Plants need more Mountain Dew. NVIDIA up to 1250s, chat. 1250s. It has electrolytes. Yeah. Great movie. It's been a while since I've seen it. But it's a hilarious movie though. If you haven't seen Idiocracy, go watch it. It's funny. All right, guys. Nvidia up there. Here, Nvidia up there. SPY at 535s. Yeah, I think over time though, like survival of the fittest, it is changing to a certain extent. Like it's becoming less athletically fit and more mentally fit in modern age with technology advancements. I think, but essentially, if you hear somebody say Darwinism or survival of the fittest, they usually just mean that dumb people will make mistakes and over time, eliminate themselves from the reproduction pool. Essentially, is what it is. Apple is a zombie tech stock. I disagree on that one. I think Apple's very strong. I think most people in the U.S. use Apple. Apple's close to all-time highs right now, too. I think most people in the U.S. have an Apple phone, and I think Apple is doing a good job of getting... I think here's a couple things that means Apple... Here's the truth, right? Young people are getting phones earlier and earlier and earlier now, right? When I was a kid, if you got a cell phone under 15, you were an outlier. You were a rarity. Like, nobody got a cell phone before they were 15, really, in the 2000s, right? And these were not the cool cell phones we have today. These were cheap, very simple flip phones and brick Nokia phones, right? Like, these were not the cool phones we have today, but you never got them if you were under 15. At modern day, my 10-year-old has a cell phone, and they got phones early. So I think that opens up more markets, and I think what it means, and most of them want Apple phones. Very, very, very rare are kids that age getting Samsung phones in the U.S. And so what that means is that once people start with a phone like Apple, they usually stay with it. And so that means future generations are probably going to use Apple phones. And that's going to mean they grow and grow and grow. And a lot of them are implementing AI. Apple's producing AI. I think Apple's got a lot of growth prospects for the future. And I think they're one of the strongest companies in the world. I'm not going to bet against them. Yeah, again, maybe you're right, Agent. I don't know, brother. Maybe. Yeah, I'm in Nvidia right now. I don't know what I'm going to do. I'm probably just going to hold it, I think. I'll probably just stay in it. Yeah, Nvidia up to 1250s. Yeah, Apple's very strong. Some UK towns are looking to ban phones. Really? Yeah, everybody keeps asking about this, guys. So today is jobless claims unemployment filings. So it's how many people are filing for unemployment week to week. Okay, it's the sheer number of people filing for unemployment week to week. Okay, that is today. Tomorrow, we have non-farm payrolls and unemployment data. Okay, so tomorrow we have actual unemployment percentage, right? Where tomorrow it's expected at 3.9%, basically flat month to month for unemployment. But today is the jobless claims unemployment filings week to week. I can't imagine buying the same stuff over and over. I have to try new stuff. Yeah, but I mean, I think with cell phones it's different though. Like once you are engraved into a cell phone like system, like you have all your cloud setups, you have all your email setups, you have all your phones, like you have all your photos, all your videos. Once you have everything formatted to one cell brand, you very, very rarely are going to switch brands to something else, you know? And so with that in mind, like it's going to be really hard for Apple to be weak, in my opinion, over the next couple years, just because new generations are using them. They've got a lock here in the US, in my opinion, but maybe I'm wrong. I don't know. GameStop has been up today. I don't know if it's going to keep going up, but it's up a lot. Looks good. Slightly green on my portfolio today as well. AMC is less green though. AMC over 5 though. That's nice. CPI next Wednesday. Today's Wednesday. Or no, today's Thursday. CPI is this upcoming Wednesday. Right. Nvidia's still trying though, man. Wow. All right, guys. So, again, AMC at 505s, Nvidia at 1240s. So, Nvidia's still pumping up a lot. We still got some time until jobless claims unemployment filings come out. So a man was paid to photograph a wedding. He was denied a plate of food by the bride, and so he deleted all the photos and left. I'm not even mad. Huh. Alright guys, look at Nvidia back up there. SPY is technically green on the day. The highs of the day for Nvidia are at 1252s. What's up, Frostbite? I'm good, man. No, I'm not in CrowdStrike. I bought Salesforce. It wasn't CrowdStrike. It was Salesforce. CRWD. I don't know as much about CRWD. I bought CRM is the symbol I bought. And again, I made money on that one. I'm pretty sure I'm up. I'm still up in it. My average price is 224s. It's at 236s. But I took a little bit of profit off. I think it was yesterday. Yeah, so we're supposed to have the European Central Bank rate decision today. They're expecting a 25 basis point cut. Very similar to what the Bank of England, or no, it was the Bank of Canada did yesterday. Get a 25 basis point cut. Interesting. Yeah, I mean, I don't think it's going to help them get many jobs. Huh. Where's Disney at right now? I hear The Acolyte is getting some bad reviews. Because we started the Star Wars. We started the prequels. So, again, we started the prequels, and my wife has no idea the storyline. So she's watching Anakin grow older, and she's like, I want to see what happens with Anakin. And she has no idea who Anakin is. And my daughter and I are kind of looking at each other, waiting for episode 3 of the prequels. We're kind of looking at each other, like, giggling behind her back, like, haha, you know? What do you think about historical pullbacks after the market? After rate cuts, 20-25%. I think pullbacks are healthy. I'm waiting to buy right now. Again, I'm in a position. I'm in a couple positions right now, but I'm waiting to buy. My positions are very small relative to my account size, and I'm just kind of waiting to buy. John Guillotines, good morning. Yeah. Yeah, apparently I figured out what my skill is in jiu-jitsu. Yesterday we did Shark Tank in jiu-jitsu. And Shark Tank is basically like King of the Hill in jiu-jitsu, but it was only takedowns, right? It was only takedowns. So yesterday we did Shark Tank, and I stayed in the whole time, man. I was proud of myself. I even beat the coach to a certain extent. I don't know if he let me win or not, just saw it because he saw me beating everybody else, so he didn't want to ruin my momentum. But you know what I was really proud of is we got this new judo black belt. He's like a judo black belt, right? And so originally they had done Shark Tank to show his skills, I think, the judo black belt, but like him and I were up first, and like the problem is like he grabs my gi, right? This is gi jiu-jitsu. He grabs my gi and he turns into me like this, right? And so my reaction is always to like grab his back and to like get my hooks in, and boom, I took your back, right? And then I'm gonna choke you out. And so I don't know, and I talked to him afterwards. He doesn't speak great English. He's Korean. He doesn't speak great English, but like when he turns to me like this, his back is completely exposed. If I can get my hooks in under his arms, like he's not throwing me. He's just lost his back. And so I ended up taking him down twice. But I think there's just differences in judo versus jiu-jitsu. I think in judo you don't have to worry about any of that stuff, so you're just trying to take people down. His side pressure is really good though. Like I can't get out of his side control. If he gets me in side control, I'm stuck. I can't move. So his pressure is really, really good. He's just got to tweak his takedowns a little bit for jiu-jitsu, I think. Anyways, let me stop talking about jiu-jitsu. None of y'all even understand what I'm saying, I think. Yeah, there's a few judo guys there. There's all kind of stuff. It's really an MMA gym is what it is, but yeah, so Tesla at 174s. Yeah, their case of Gatami. His case of Gatami is so good, bro. I can't get out of it, dude. Like I'm not used to being that deep in side control. I mean, that's modern side control where you like get crossface and you pull their arm up and then you get their arm really deep under your armpit and then they can't freaking move. But his is really good, man. His case of Gatami is again, it's if he gets me there, I'm stuck, bro. I'm not moving for the rest of the round. And usually I can squirm out of side control, you know, with like a lot of the time I'll go north south and shoot for like a Darce choke or something. But yeah, he's good. He's good. He's a good guy. His name's JB. I don't think that's his real name because he's Korean. So I'm sure his name. I think he said his name was something else. But big drop on big earnings. Big, what is that? Big Five? Big Lots. Big Lots is going to fail, though. Like, it's a retail company. It's obviously not going to, like, it's Big Lots. You know, the problem is that everything you buy at Big Lots, you can order at Amazon fast now. So you can get whatever you're going to buy within 24 hours on Amazon now. And that's bad for Big Lots as a company. Retail-wise, companies like Big Lots are just going to continue to fall. They're going to continue to go out of business. I could never justify buying them. And they've been dropping since 2021. So today's data, jobless claims are expected here. I'll put this up on screen. Jobless claims today. I'll put it up. I think they're expected at 220,000. All right, so yeah, jobless claims today are expected at 220,000. Yeah. So we'll put that up on screen so you guys can see it. 220. Yeah, but I changed the style of my guillotines though. Like I've tweaked them. So now I'll shoot in with an arm in guillotine. And then lately I've learned to transition my hands to where I start going for an arm out guillotine, which is usually much tighter but harder to follow. Like I can follow an arm out guillotine into mount, or an arm in guillotine into mount. But I've been lately doing more so arm in or arm out guillotines, and then if they squirm out of it, I'll throw a Darce choke on them and then finish it with a Darce or something like that. That's kind of been my sequence lately, but so not as many guillotines, more Darce chokes now, but still. Nvidia up to 1250s. Let's see if it holds. The SPY at 535s. Yeah, big lots I just can't justify buying it either. It just looks too weak. It's down too much. Down to $2.50 a share. I just think there's very little chance this company survives long term. They can't sell their products online. They're too cheap. And they're just not going to succeed at retail because nobody, again, they're going to lose interest over time because of mail order goods like Amazon. Yeah, Dustin got Darce choked at the end. Yep, that was a Darce. Yeah, again, I'm waiting for a big market correction to the downside. That's really what I'm waiting on. I'm waiting for a big pullback. I need a big pullback before I start buying up blue chip stocks again. We've been around lifetime highs for too long in most of the major tech stocks like Nvidia. I'm in Nvidia, I'm riding it up. I'm in Apple, I'm riding it up. We're around lifetime highs. But before I add bigger size to anything, I need pullbacks. Like everything's just so close to lifetime highs that we're too extended on the upside. I would much rather just wait and buy dips. Like Amazon is at lifetime highs, Apple is at lifetime highs, Meta is around lifetime highs, Google is at lifetime highs, and I'm in a lot of these. I'm in Google, I'm in Apple, I'm in Nvidia, I'm in Tesla. Tesla's nowhere near lifetime highs though. But in order for me to really start to add some large size, some more risk to these positions, I kind of need, I need pullbacks. I need a decent little correction down. If we look at the SPY as an example, SPY broke lifetime highs yesterday, got up to almost 535s. Again, you can see it right here. This is the lifetime high right here. But again, I need a dip. I need a couple weeks of red before I start buying stuff up at least. Yeah, I mean, but a historically go away in May is a thing, dream. And May was very good this year. We went up, 5% this year in May? So go away May didn't work this year. So you can't always use the month of the year to dictate what you want to do because it does vary and it's all generalized on average. Like on average, May's a bad month. But this year, May was good. May was, I think, the S&P did, 5% this year in May? So what's up, Sam? Yeah, I'm in GameStop right now. Yeah, my average price is $15.16 on GameStop, so I'm in it. I'm in AMC as well, Nvidia getting closer and closer to lifetime highs. This should drag the market up, I would assume. Connor is out of 303. I heard that yesterday, but I heard there was some better news for it. If Connor drops out, it's going to, They deleted a press conference. Yeah, according to Ariel Hawani, the promotion sent out feelers to see which fighters might be able to fill. It's not going to be the same, though. Like, Chandler's good. He's not Conor, though, you know. Holloway could save it, but, yeah, it's not going to do nearly the numbers it would if Conor fought. Has Conor said anything, though? Yeah, so watching NVIDIA, AMC's kind of flat. I'm looking at the SPY. The SPY's been kind of low liquidity. I don't know if it's waiting for these jobless claim numbers to come out, but you should sell in June. It won't be too soon. I don't know, man. I don't mind pullbacks. I'm willing to buy pullbacks. Cuts are inevitable. Yeah, I just don't think we should cut anytime soon. I know the Bank of Canada cut rates, and I know today the European Central Bank is expected to cut rates. I hope the U.S. doesn't follow suit. It's too soon, man. Again, inflation is crazy. I say this multiple times a day. I'm going to say it again. Inflation has been out of control the last 5 years to a point where a lot of people that don't really understand economics think that we're in a recession right now, and we're not. We're not in a recession. We're not near a recession. The real reason people are unhappy in the economy is because inflation has spiked so much over the last 5 years, and prices don't generally go back down. I say this every day. I say it multiple times a day. Prices don't go back down. And so once they're up, they stay up. And so we've already had prices go up a lot the last 5 years. We see it reflected in everything. And so we can't really handle more inflation spikes right now. Inflation needs to get really under control before we start cutting rates. And I get it. Rates have been high for a long time. The Fed's been doing quantitative tightening, which is basically they just stop expanding their balance sheet. They stop injecting liquidity into the bond market. And this causes banks to keep interest rates high, right? They've been doing a lot of things to keep interest rates high. But inflation is our priority, I think. It should be. But again, I'm from the stance of like, I don't really care about buying a house. I don't really care about getting loans. A lot of businesses are going to say, lending is not really as accessible right now in any reasonable interest rates. Right now, mortgage rates are still 7-8%. It's hard to sell houses when they're that high. So a lot of pressure from mortgages and banks and real estate agents, and I get it. But inflation is our priority, and we should keep inflation the priority. We should keep interest rates high. I don't think we should cut rates soon. What economic data has been bad, though, Curtis? Curtis said, odds of rate hikes this year have gone up due to poor economic data. If Friday's numbers are bad, then probably... I mean, what's bad? Is less payrolls bad? I don't necessarily think so. I don't think less payrolls are bad. I think more payrolls signal high inflation problems. And the manufacturing thing, like, you got to understand, like, yesterday's manufacturing and services, but I don't know if economic data has necessarily been bad. It might have been lower, but I think, to be honest, you got to understand the Fed's keeping interest rates high to discourage spending, like to push these things down, to push payrolls down, to push jobs down, to push spending down, because that combats inflation. So it depends on what you consider bad, I guess. Yeah, payrolls come out tomorrow. Unemployment comes out tomorrow. Jobless claims, unemployment filings come out today, though, chat. Yeah, bro, we seem to have a lot of people here. I'm gonna have to clarify, since a lot of people are misunderstanding. Non-farm payrolls and unemployment drop tomorrow. All right, let me put this up. All right, so again, jobless claims unemployment filings released today at 8:30 a.m. and are expected at 220K. We will cover the release and market reaction live on this stream. Non-farm payrolls and unemployment drop tomorrow. Those are two different things. GameStop ripped over highs. It's up to 32s now, chat. Let's see if that continues. Yeah, I mean, if we look at the watch tool in terms of when they're going to potentially cut rates, yeah, so again, here's the probabilities of a rate cut. September is actually when most people think we're going to cut rates. About 57.5% of people in September think we're going to start cutting rates. It's still a little too early for me personally here. Yeah, so still most people still expect in July we're going to pause rates, and then everybody expects we're going to pause rates with 0.3%. We got 0.3% of people expecting a rate hike, which is just honestly, it's not going to happen. But interesting to see the percentages there. Nvidia dipping down a little bit. The SPY is basically completely flat right now. I do think you are a little off on this argument, though, in my opinion. Yeah, it's all right. We could agree to disagree. More people borrowing money and under than people worried about paying extra for a Happy Meal. I promise you, inflation is a huge problem. I get an interesting look at it through chat. You know, people are mostly upset about prices, right? They've been upset about prices over the last 5 years. That's been one of the biggest arguments, the biggest negative topics that I see here regularly, and that I also see on the news. Prices have gone up a lot, specifically in the last 5 years. So I mean, yeah, it's a tough market. I think it depends on what circles you're in, you know, but yeah. Lower the interest rate will help the economy. In general, many people are looking to buy and sell homes and take out loans to expand. John, I understand real estate agents, real estate like mortgage brokers, lenders, and banks, and some people that want to buy and sell homes currently want interest rates to go down. I really understand it. Like, I get it. But again, you got to understand prices have gone up a lot over the last 5 years. They don't really go down. And so once they go up, we're stuck with them. And so if prices, my point in that is that if prices continue to rise, that's a big problem. Like if inflation spikes to 5, 6, 7, 8% again, that's a huge problem because prices have gone up so much in the last 5 years. It's not sustainable. It's not going to work. Like, it's going to break. And so I understand there's a reason it's harder to buy homes right now. It's because the Fed is keeping interest rates high, as they should be, because inflation is the priority. It needs to be the priority. And yes, you're going to have people who want to buy and sell homes. You're going to have mortgage brokers. You're going to have real estate agents. You're going to have, you know, like I said, realtors, people related in real estate developers. They're all going to be unhappy in these situations. And that's understandable because, again, it's hard to buy or sell a house with interest rates at 8%, especially when you look at all of that relative to what they were prior to 2019. In 2019, interest rates were 2.5%. So it's really hard to get somebody to refinance a home right now and pay 3 times the interest rate. It's really hard to get somebody to, you know, refinance their house or whatever, you know, paying 3 times the interest rate. So I get it. I really do. But I guess in my opinion, it depends on priorities. And I think, I think unemployment's still low. I don't know. It's arguable for sure. All right, guys. AMC, GameStop spiking. GameStop about to hit highs of the day here. Yeah, we got the ECB. Less jobs signal less growth. Economy is about growth. Sure, but it's not always about growth, brother. Right? Like, the Federal Reserve's job is to balance the economy. Too much of anything is bad. Too much growth is bad. Right? And too much growth causes inflation. You know? And so it's a balancing act between inflation and recession risks, really, is what it is. It's recession risks on one side and then inflation risks on the other. The stronger the economy, the stronger the labor market, the bigger risks to inflation there is, right? And when the Fed keeps interest rates high, it's called a hawkish Fed, right? When the Fed's hawkish and they want to keep interest rates high, they're doing that to discourage the economy. You know, that usually means the economy has been too strong and inflation has spiked. And so an example of this, like, look, if we look at CPI inflation's graph here, right? So here's the CPI inflation's graph. right? This is CPI inflation over the last 10 years, okay? Like, look. There's only a couple times where prices have actually gone down. You know, so what that means is that once prices are up, it's hard to get them to go back down. In 2020, after the pandemic, the Fed stepped in and they stimulated the economy. You know, and again, the Fed can do this anytime they want. They don't just never-endingly stimulate the economy, because that's bad, because prices would go up to an unreasonable amount, which they kind of have already, right? So if the Fed steps in and does QE, you know, quantitative easing, a more desperate thing to stimulate the economy, it's something they did in 2020 and 2008, and we talk about this every day, but I'll talk about it again. When the Fed does that, it's a desperate move to try to stimulate the economy. They sent out stimulus checks as well, which contributed to more spending, and they brought interest rates down to almost zero. Right? And so, of course, people are going to say, hey, well, a thriving economy is good. To a point, yes. Right? But when you look at the inflation spike that occurred from that stimulation of the economy, you know, inflation spiked up to almost 10% up there. That's not sustainable, you know, and once these prices go up, it's hard to get them to go back down. And so it's not like we should just stimulate the economy never-endingly and just pump prices up to a ridiculous level. It's not sustainable in that way. And so the Fed right now has been playing cleanup from this inflation spike, right? So from this inflation spike, the Fed's playing cleanup. That's why interest rates are high. That's why the Fed has been hawkish and reluctant to cut rates. And they should be, because, again, we can't really deal with another this right here. Like, we're not going to be able to handle that. Inflation goes up, it doesn't go back down. We're not really going to be able to handle that. And so the Fed's job is not always to stimulate the economy. Again, if they did, prices would rise so much, everybody would freak out. And again, people are still unhappy now. I see people complaining about inflation daily. Everybody's complaining about inflation. Yeah, we'll cover the ECB decision. It's the less jobs. Yeah, but unemployment's been under 4% for a long time, Dream. That's why the Fed's keeping interest rates high, is because unemployment's low. If unemployment spiked and we had like a stagflation scenario where we had high unemployment and high inflation, you know, then it's a little bit arguable what the Fed should do, right? But with unemployment low, with labor market being strong, and with up until this last month, payroll numbers are strong. Like, everything's been pretty strong. You know, one month's lower job numbers does not mean it's the end of the world, right? For the last year plus, jobs market, JOLTS report has been higher than expected. Unemployment's been low. Payroll numbers have been high. And so all of those things signal that the jobs market is still strong. People are still working. They're not having problems finding jobs. You know, what they're really having problems with is affording things with the jobs that they have because of the inflation spikes, is what I would argue. Yeah, Starbucks, $7 coffee, $6 for chicken nuggets. Yeah, people are upset, man. I'm telling you, prices going up has caused a lot of people to be upset. Yeah, the stock market is a completely different thing. All right, chat. We still got 35 minutes or so until the jobless claims unemployment filings. We'll get the ECB decision in about 15 minutes. We'll cover that also. Again, the ECB is expecting a 25 basis point cut today. We'll see what they do. We'll cover that as well, though, for sure. On Rotten Tomatoes, are you able to see the audience reviews anymore? I'm trying to see it. It won't show it to me. Does it just not show you anymore, or what? Is there no way to look at it? Oh, well. All right. GameStop over the VWAP, though, over the 200 EMA, over the previous closing price. NVIDIA still consolidating up there. I think the ECB rate decision's interesting. I think it's probably going to go with what's expected, which is a 25 basis point cut, but you never really know, I guess. John, I have a good bit of cash. Where should I set it other than treasury bills? I wouldn't go with treasury bills personally, right? Like what I would do, and again, I'm going to preface this with I am not an investment professional. I am not liable if you lose money. Always make your own assessment. Trade responsibly. I can't tell you what to do or what you should what you should let your money sit in. Okay, I really shouldn't tell you what to do. I have no idea what you should do. I might be wildly wrong about anything and everything I say. Do not copy me. I'm not an investment professional. Understand I might be terrible and not know what I'm talking about. I do trade off stream. I don't guarantee anything. I'm not claiming to be super profitable. Not an investment professional. I'm not liable if you lose. With that said, it depends on what kind of gains you want, brother. It depends on what kind of gains you want. If you want more gains with more risk, stock market. You could dollar cost average into the S&P and the NASDAQ, right? That's the first thing. If you want, that'll give you roughly 7 to 12% a year on average. Dollar cost averaging into the S&P. But it's going to take but there's more risk for sure. If you get stuck in like a bear market or a market crash, it's worse for sure, right? And you might lose money. That's the risk. Over time, you should make money. But, with that said, you might lose money. The other option is if you want guaranteed returns, right? Guaranteed returns. Personally, I would go with like a CD. You can make, 5% in a CD, 4.5%, 5%, and that a CD stands for certified deposit, right? So you can make similar gains to bonds by just leaving your money in a bank, for a specific amount of time. They're going to pay you. So like a lot of banks will do, you got to look up which banks do it, but you should be able to find a list. And a lot of banks will give you like 5% if you leave your money in them for a year or whatever. And so you'll basically earn 5% leaving your money in them from a year. If you want long-term guaranteed returns, which I think is more risky because you don't know how much the market might push up or whatever, then you could go with treasury bonds and stuff like that. But it's subjective. It depends on what your risk tolerance is. All right, guys. What was I about to look at? Oh yeah, Roaring Kitty. They said they updated his YouTube. Did he really? Looking at Roaring Kitty. Sorry, guys. Videos. 3 years ago. Live. 3 years ago. Playlists. It said he updated it today, but I'm trying to find it. What did he update today? So what did he update? I guess is the question. Yeah, I don't know. I don't see anything new. In the early 80s, Fed short-term interest rates were in the neighborhood of 20%. Yeah, again, I get it, man. Like, I understand rates have been higher, and I think the rates currently aren't crazy high. But relative to the last 20 years, they're pretty freaking high. Stock split next Monday. Yeah, Nvidia. He's gonna be dropping a video. Maybe he's prepping for that, but I think it's a little premature to bet on that. I don't know. Tesla's starting to creep back up, though. So Tesla is starting to creep back up. All right. Again, we got time. We got the ECB decision in about 10 minutes, Chad. About 10 minutes before the ECB decision. We'll see if that influences markets. It might. I don't know. Yeah, I don't know. It's strange. All right, SPY at 535 here. So the SPY is still trying to move up. Tesla is trying to creep up as well, still at 175. Tesla hasn't really moved. Earnings season is in about a month from now as well. So we got the new earnings season coming out. All right, we're at 535. All right, we're at 1250s. SPY up. All right, guys, so we only have about 5 minutes left until the ECB rate decision. About 5 minutes. Let me throw this in sub-only mode. We still got 20 plus minutes until... Yeah, we only got 20 plus minutes until jobless claims numbers come out. So again, the expectation is for a 25 basis point cut. Yeah, it'll be a fun day if he goes live. That's the next catalyst, I think. Yeah, we're watching GameStop. GameStop over 32s, mostly driven by potential hype around Roaring Kitty posting to YouTube. We'll do a poll for jobless claims numbers here. The ECB is pretty certain to come out as expected. We'll do a poll for job. Yeah, so the ECB is almost certain to come out as expected. Just jobless claims come in. Or how about, does the market want higher or lower jobless claims? All right, so there's the poll. Vote on that poll. Let me know what you guys think. Yeah, next week we got the rollover. Tesla's still moving. AMC flat. Nvidia still trying. You know, Nvidia broke 1,200 yesterday, which is crazy. All right, guys. 4 minutes until the ECB rate decision. So we do have the ECB decision in 4 minutes. Ugh. All right. All right, chat, here we go. 3 minutes left. I'm curious to see how the ECB decision is going to influence markets. Here's the SPY on the right side. So the SPY has been really flat, maybe in anticipation of the ECB decision. I'm not sure, but we'll see if it moves the market at all. All right, so look at the Nasdaq shooting up a little bit. I'm gonna put the Q up here as well. So there's Nvidia. We'll put the Q up on the left side. We'll put GameStop back up in a second. But Q has a little bit more volatility than the SPY. We got Nvidia in the middle here. All right, Nasdaq's moving up there to test highs. All right, guys, less than a minute before the ECB rate decision here. Got about 800 people live. We still got about 15 minutes before jobless claims numbers. Not always. They don't always move in unison. They can, but they don't always. Let me look at our poll number. So we did a poll here. 69% think people want higher jobless claims. I agree. I think the market wants less economic growth and higher jobless claims numbers. I think that'll cause a positive reaction in markets. So I agree to a certain extent. QQ breaking highs of the day here. Q up to 464s. Yeah, this is the lifetime high. So the Q breaking lifetime highs. We got about... All right, so there's the number. So the ECB decision should be out. Let me see. Yeah, so they did as expected. ECB did a 25 basis point rate cut, and the Q's moving up. Is the market dovish? Does the market want? So again, ECB rate decision is out. They did a 25 basis point rate cut, and markets are moving up on that. Yeah, so again, the Europe Central Bank cut rates 25 basis points here. Yeah, so again, the ECB cut rates, you can kind of see it here. ECB did cut rates. Again, not a shock. It doesn't mean we're going to cut rates either. I mean, maybe we do. The next Fed meeting is next Wednesday, is when the next FOMC meeting is. Now, the market's pushed up, but the Q is pushed up, but the SPY is actually down on this news. Again, I don't think we should cut rates. I think it's too early. Of course, we got realtor, mortgage broker pressure, lending pressure. Of course, they want rates to go down. They're struggling right now. But, you know, again, I don't think it matters. I think right now we should keep interest rates high, you know. Nvidia trying to move up as well as at 1250s. ECB cut in Canada. Why are we waiting? Because inflation is a problem. All right, so here's the ECB statement, Chad. The ECB statement is right here. Deposit and refi rates cut by 25 basis points, 3.75 and 4.25 respectively. Will keep policy rates sufficiently restrictive for as long as necessary, and will continue to follow a data-dependent approach. That is what they said regarding this. Again, we do have jobless claims, unemployment filings in about 12 minutes. Well, you got lenders basically that don't really care about inflation. You know, they just want more business, right? So that's the pressure that everybody's getting. It is an election year. We'll see if we cut rates, but yeah. Again, I'm one of those people that think that we should keep interest rates as high for as long as we possibly can. All right, so the ECB staff projections, they lifted 2024 and 25 headline and core inflation forecasts. GDP forecast raised by more than expected. Put that up on chat too. Nvidia down 30% today. What? 30% down. Nvidia is up, gapping up today. Keeping rates high hurts the economy and the average person. I mean, I disagree. I think outside of real estate buys and sells, most people rent, and I think most people have a home already. Outside of buyers and sellers of real estate, as well as lenders like mortgage brokers and real estate agents, you know, I don't think it really matters if interest rates are high outside of lending. You know, I think more people complain about inflation on a regular basis than complain about high interest rates, you know. Are rates causing inflation at this point? No. The labor market being strong and jobs being strong and payrolls being strong over the past year have caused inflation. All right, guys, we got about 10 minutes left before jobless claims. We got a little bit under 1,000 people here watching live. Again, y'all slap that subscribe button if you haven't already. I appreciate it. Only hurts debt borrowers. Look at ASOP. Exactly. It's the only people that are really upset about high rates are lenders or borrowers, right? And a lot of them shouldn't be borrowing. If it's affecting them so much, they shouldn't be borrowing right now anyway. I don't think we should spike inflation just to prop up lenders right now. I think that's a silly thing. Government spending has caused inflation. Well, it's not really government spending. It's more so, it's specific. It's a very specific type of government spending. Quantitative easing, rate cuts, and quantitative easing have caused inflation, as well as stimulus checks from 2020. You know, all of those things essentially caused inflation spikes. Bringing interest rates super low caused inflation. And the reason, you know, so basically, again, in 2020, the Fed brought interest rates down to almost zero, trying to stimulate the economy and save it from the pandemic, right? So lending was very cheap, and the consequence of it is that a lot of people bought homes, a lot of people got lending, a lot of people were paying less in mortgages and interest, and so they were able to spend more money on other things, and thus it stimulated the economy. No, because it's my shirt, and you can't wear my clothes, and that's my shirt. No, love you, but no. Sorry, you're just not reliable. I love you. My daughter's trying to wear my Houston Rockets shirt. I had to reject her. I'm rejecting her for a very specific reason. Okay, my daughter begged me to wear my hoodie one day. Begged me to wear my hoodie. Promised me she wouldn't lose it. It was my new hoodie my wife got me for Christmas, right? So the next day she wears my hoodie to school. And when she gets home, my hoodie's nowhere to be found. And I'm saying, Maddie, where's my hoodie? And she says, oh, I don't know. Somebody stole it, she says. Really, she left it in the lunchroom and somebody picked it up and now it's gone forever. So never again will I let her wear my clothes to school. Never again. You've got to be kidding me, right? In what way, CWC? What am I saying that's wrong, CWC? You know, tell me where I'm wrong, and it's all right. We can talk about it. If you disagree, tell me. It's all right. We'll talk about it. But again, don't just say, "Oh, I can't believe that." Just, again, and then nothing, and then crickets. Because again, that's usually because you don't have an argument. You're harsh, bro. I'm a softie with my daughter. Dude, listen. I love my daughter. But she ain't wearing my clothes to school again. She loses them. My daughter, I've literally spent thousands of dollars on AirPods because my daughter will take my AirPods, beg me to use them, and then lose them. Okay, she's lost sweaters bringing them to school. She's lost everything wearing my clothes to school. And so at a certain point, you got to create a rule. Like, nah, bro, you're not wearing my stuff to school anymore. You lose too much. Boundaries. Chat. Boundaries. I have 3 kids. That's how they learn. 100%, dude. You gotta. Yeah, that's what daughters do. But this is my response to that. It's just no more wearing my clothes to school anymore. She's got to respect my stuff. If she doesn't respect my stuff, she can't wear them. Yeah, I think that's reasonable. Yeah, she's a good daughter. She's a good kid. Right? She's a good kid, smart kid, does well in school. She sold them. Nah, she didn't. She just lost them. All right, guys. Hey, we got 5 minutes. 5 minutes. The Q is pulled all the way back down. It looks like the rate cut news is negatively impacting the markets. Tell her when she can submit me on the mat, she can borrow again. No, she wouldn't even roll with me. I don't even think my daughter would roll with me if I asked her to. She wouldn't. I don't really want to roll with her. I don't like rolling with females at all. There's this weird etiquette-like thing where you're not supposed to use strength, or speed, and I don't know, man. It's just an awkward position. All right, so jobless claims numbers expected at 220,000. This is how many people are filing for unemployment month to month, or week to week, I'm sorry. So it's expected at 220,000. Let me put this banner up now. So again, jobless claims, unemployment filings expected at 220,000. Let's update the poll. We just did the poll. Does the market want higher or lower jobless claims? I think that's the perfect poll leading in jobless claims in 4 minutes, chat. Let's see what we get. Again, there's the Q on the left. SPY going red after the rate cut news for the European Central Bank. People are certainly spending more. CWC, maybe not right now, but following 2020 with the low interest rates and the crazy housing boom that we got from that, people were certainly spending more, lending more, stimulus checks. You can tell this, right? You can tell this because the prices of Rolexes specifically doubled over the last 3 years. Okay, you can look at Bernard Arnault, now one of the richest people in the world. Why do you think that is now? Because people are spending more. Because after 2020, interest rates went down to zero, basically. And the consequence of that is people had cheap lending, so they spent more, they got more loans. It grew the economy in that regard. As well as stimulus checks were sent out, so people got free money. They started spending more because of that. The government did spending. They did quantitative easing, which means they bought up a bunch of bonds and expanded their balance sheet. I'm sure the government spent in other ways too, of course. But yeah, spending certainly increased after 2020 and the pandemic for sure. People were home. They got checks. They interest rates were low. That's definitely what happened. But again, it's all good. You might be right, baby. We could agree to disagree. jobless increase for sure. Yeah, we got 2 minutes, chat. 2 minutes. All right, guys. So we got less than 2 minutes. Give me your last minute predictions. Again, expected at 220,000. Okay, so here's non-farm payrolls. So you're saying, is it, look, here's non-farm payrolls since July of 2020, okay? This is the non-farm payroll graph since July of 2020. Here's July of 2020 here. So yeah, that is, again, we could argue that the labor market's not strong. Again, it's all good. It's all good. $222, $217, $225, $270, $235, $225, $220. Yeah. Yeah, it's all good. We can have the conversation and agree to disagree. CWC. Again, people. All right, here we go. Here's jobless claims, chat. My bad. All right, jobless claims numbers just showed up. Non-farm productivity. Jobless claims showed up higher than expected. Higher than expected jobless claims, chat. 229 versus 220,000. Higher than expected jobless claims. 229 versus 220 expected. Much higher than expected jobless claims numbers. And again, the market has reacted positively to this. Why do you think that is? Why do you think the market's reacting to more people filing for unemployment, chat? 229 versus 220 for jobless claims. Here's an interesting thing. The market reacted negatively to a European Central Bank cut and positively to more people filing for unemployment. Why do you think that is? Because the market fears inflation over everything else right now. And I think this is very true. If you look at the data and the reactions to the data over time, the market absolutely fears inflation. And it's been like that for the last few years, chat. And so again, another argument against a rate cut. The market fears inflation. The market does not want prices to rise anymore. Again, the market reacted negatively to an ECB cut and positively to higher jobless claims numbers. Now, it doesn't mean it's going to necessarily hold. We'll see. Sometimes the first move is the wrong move. But I absolutely think the market fears inflation. Yeah, I mean, again, this is a weekly report. We'll see the real report tomorrow. So again, just to put this into perspective, chat, a weekly reading on higher than expected jobless claims numbers, it's not going to signal it's not the most hawkish thing ever right now. The market's really kind of flat. I think most of the market's actually waiting for tomorrow's payroll numbers, which will give us a little bit more of an inside look at it. So you know, I think a lot of people here are taking the approach of less economic growth is a bad thing, right? But I think you have to understand the real nuance of the market over the past few years, chat, okay? So again, I'm going to go over this again, all right? And again, just try to listen. And again, if you disagree with me, it's all good. Like, I understand. It's super nuanced. Maybe I'm wrong here. But from my interpretation of the market, chat, over the last 5 years, the market's been interesting. Okay, conventionally, more economic growth is a positive thing. Of course, we want the economy to grow. We don't want unemployment to spike and have super high unemployment, right? But unemployment's still under 4%. It's been at 3.9% or less than that for years now. It hasn't ever spiked over 4%. So unemployment's been low. The labor market has been incredibly strong relative to convention. The labor market's been very strong. Despite what anybody wants to say, the jobs market's been strong. If you listen to Powell during the FOMC meetings over the last year, one of the very common themes of his speeches is that the labor market is robust, almost too robust to a certain extent. Because again, the Fed's job is to keep the economy balanced. Too much of anything is bad, right? So too little people working is bad with recession and depression risks. Too much spending and too strong of a labor market is also bad because people spend too much and inflation spikes. And again, the priority now should be inflation, in my opinion. I don't care about lenders. I'm sorry. I don't care about real estate agents. I'm sorry. I don't care about home buyers. I'm sorry. I think inflation is the number one target that we should prioritize, because inflation has been rampant over the last 5 years, despite what anybody says about anything else, despite what any other argument people say. Inflation has gone up massive amounts over the past 5 years, and prices simply do not go down. They don't go down. Once they go up, they're stuck there. The best we can do is hope to slow prices down. And so with the massive increase in prices over the last 5 years, we cannot handle more inflation. So again, I'm under the line of keep interest rates as high as you can for as long as you can. We already brought interest rates down in 2020, and that's what kind of spiked all this stuff. We brought interest rates down when people are paying less money in mortgages and less money in auto loans and less money in lending in general, less interest. They have more money to spend on other things. We sent out stimulus checks to contribute to more spending, and always wanting high spending is not a good thing. The consequence of that was almost 10% inflation over the next year or two. Inflation spiked to almost 10%. You can see this in the CPI graph here. You can see this in the CPI graph. If we look at this from 2020, right? So here's the last 20 years. Inflation got up to 9.1% in 2022, in April of 2022. So inflation has spiked, right? The consequence of this is prices getting really unreasonable. And of course, people are going to complain no matter what, right? If the Fed brings rates down, people are going to complain about inflation. If the Fed keeps rates high, people are going to complain about, I can't buy a house right now. Mortgage people are unhappy. Real estate agents are unhappy. So no matter what, somebody's unhappy. The Fed's job is to keep it balanced. And so, the Fed's been keeping interest rates high. Now they've been pausing interest rates for the last year or so. Prior to that, they raised interest rates to combat, again, this 9% inflation. Anyways, regardless of any of this type of move is relatively insignificant, right? So the Q is still technically green on the day. Nvidia is down very slightly, still up a lot, and the SPY is only slightly red. The real report comes tomorrow, chat. So the real report comes tomorrow. Tomorrow is when the big report drops, which is payrolls. Non-farm payrolls is a much bigger report than anything else. We got unemployment tomorrow as well, but the payroll numbers are really what you want to pay attention to tomorrow, and they are expected, chat, at they're expected at 186,000. Anyways, with that said, if you want to check out one of my sponsors, guys, so we are making some money in our Apex funded account. If you want to learn to day trade with me, day trading is something where most day traders lose. Most day traders lose. It doesn't matter what course you take, who your mentor is. Most day traders are going to lose money. With that said, though, there's a lot cheaper ways to learn day trading. If you put up $5,000 of your own money, you're probably going to lose that. I'm here to break it to you. But you can learn for much cheaper in something called a funded account program. Apex is the most legit one in the world. They give you a demo and they test your skill with a demo account in futures. And in the futures market, you can basically trade the SPY and Q price action in the NASDAQ E-mini, which is what the Q tracks, and the S&P E-mini, which is what the SPY tracks. You can basically trade it. Patterns are very similar to blue chip stocks, but there's no PDT rule, so you can day trade short. If you want to day trade stocks freely, you need $25K in a margin account to do so. That's unreasonable. You can do the same thing basically trading futures. You can't trade individual stocks, but you can trade the SPY and Q. And they give you a demo and they test your skill with a demo account first. So the base one's $25K. They give you a $25K demo account. If you can make $1,500 without losing $1,500 while following their rules and conditions, they fund you $25K with a 90% split. And so it's the best of both worlds. It's limited risk. That $25K account challenge costs about 30 bucks. You know, I think it's less right now actually, but it's about 30 bucks. So if you lose, you're out 30 bucks a month, right? It's not the end of the world. If you pass it, you get 25K in funding with a 90% split. You make 10K, you keep 9 of that, you keep 90%. And they fund thousands of traders. They pay out millions of dollars. They paid out almost $200 million to their traders. They're one of the most legit ones in the world. It's a great way to learn trading with some pressure. You're still risking something, but it's not the full extent of risking thousands like most traders do. And so it's a great way to learn how to day trade. Although, again, they are a sponsor of mine. They pay me money. I'm biased because they pay me money. And so they're a sponsor of mine. If you want to check them out, understand CFTC 4.41 with these funded account programs, hypothetical or simulated performance, have limitations, and all that good stuff. If you want to check them out, here is the link. Yeah, I mean, market, like, yeah, the SPY is, look, if people want to act like this is the, like, end of the world drop, look. Here's the previous closing price right here. Here's the SPY. So we are literally very flat on the day. Nvidia is still green. The Q is still technically green on the day as well here. So the NASDAQ 100 is still technically green. But yeah, we'll see. We'll see what the market wants. Maybe the market is back to convention where it fears economic weakness. That's certainly possible. And I think the real test of that is going to be tomorrow. It is an election year as well. Yeah, I'm catching back up on the chat here. Recession is on the way. I don't know. The recession is 2 losing GDP quarters, and I don't think we're near that yet. We haven't even had 1 losing GDP quarter. So, you know, a recession's not going to be on the way until we actually have a losing GDP quarter, in my opinion, you know. Yeah, I just think people sensationalize movements in markets to justify. I think we're still pretty flat on the day here, guys. NASDAQ's still a little red, but roughly most of these are consolidating around the previous closing price. We're actually getting pullbacks in Nvidia is what's dragging a lot of this down, I think. So gardening, if you use my coupon code BT, you got to use the coupon code BT, beginner trading is what it stands for, BT. If you use that coupon code at checkout, it'll be 90% off for the 25K challenge. If you get the 250K challenge right now, it's less than that. It's like $18 if you use my coupon code. It's like 18 bucks. And so you can get the 250K challenge for 18 bucks right now if you use my coupon code BT. You just got to use it at checkout. Recession is always on the way. Yeah, you know how it goes. Doom and gloom, guys. Again, a lot of them get wrapped up politically, and so and it's an election year as well. So people want to act like it's just the worst it could ever be. I don't know. Again, it's an election year. I tend to be bullish, and the markets are up a lot in terms of stock markets. But the economy's different. Economy's a little bit, again, more nuanced than that. Economy is something where, like, we can have strong payrolls, low unemployment, strong payrolls, low unemployment. The moment we have less than expected jobless or higher than expected jobless claims or lower than expected payrolls, everybody comes out saying the market's going to, or the economy's, it's the end of the world, basically. And again, I think it's a little premature. I'm okay with keeping interest rates high. Yeah, we got some free courses on YouTube. So there's the SPY moving up a little bit now. Again, we're all really basically flat on the day. The SPY, the Q. Nvidia slightly green. All right, so again, we're trying to move up. Now, Q is actually back green. SPY's essentially flat. What's the best EDM nightclub in H-Town now? Bro, you're asking the wrong dude. I have no idea about any nightclub ever. I don't go to clubs. I'm married with kids, bro. Clubs kind of like a single place, like a place for singles. I'm not a big dancer either, and so club's not the place I want to go, you know. Yeah, I'm not a big believer in going to like clubs. Like, I don't know. I'm just not a big believer in it. Once you're with somebody, it's like it's kind of a single place where you go to meet women, you know, for a guy, and women go to meet men and stuff like that, you know. I get the whole we're just having fun thing. I get it, but like, you know, just not for me, man, at this point. My biggest loss on the market, I don't know, man. It's I'm sure I lost a couple $1,000s in my first couple weeks of trading. In terms of short-term loss, that might be it, but I don't know. I'd have to go check. The reason most people lose money is because what happens is like they have a big loss, they take a big loss in the market, and then they get discouraged about it, so they trade larger. They increase their size, and then they lose more. Right, and then they increase their size again, and then they lose more until it gets to a breaking point where they've lost so much money that they're kind of like, screw it, let me just risk my whole account, and then they lose again, and their whole account's bye-bye, right? Like, that happens a lot. Top 3 dancers in the world right now as well. Saying a recession is coming is never false. Well, yeah. Saying a thriving economy is coming is never false either, though, I guess, in that regard. Eventually, we're going to have a thriving economy. Alright, guys. Oh, man. I mean, I'm gonna go with Dallas with Luka. They got Kyrie as well, you know. They got PJ. All right, Chad, we don't have anything else today, I think, right? Let me make sure. All right, so we got the ECB press conference in, like, right now going on. Lagarde speaking at 10. We got bond auctions at 11:30 today. But that's basically it. Again, tomorrow's the big day. It really is. Winter is coming. I'm excited for the new Game of Thrones. Oh, wait, when does that come out, bro? Hold on. House of the Dragon Series 2. When does it come out? June 16th, bro. We got freaking 10 days. I'm excited. I like House of Dragon. Some people hated it. I loved it, man. I thought it was good. You just disappointed me on that answer? That's what I live for here, brother. You know. I'm not a big basketball fan. I'm more a baseball guy, football guy. Yeah, I'm more of a football, baseball player, you know. I was never really good at basketball. All right, so we're sitting, consolidating down. GameStop over 32s. Super Nintendo beat. Top 3 most disappointing answers in the world right now. Yeah, listen, that's what I'm here for, guys. Yeah, again, I'm not really a basketball guy, you know, like I'm really not. I'm not. It's not like I'm really, you know. Again, I'm more a baseball guy, football guy. I'm an LSU fan, you know. The only real like I've been watching the Angel Reese, Caitlin Clark stuff going on in basketball, but yeah. Outside of that, I'm not the biggest basketball watcher. Yeah, I watch MMA. I'm a big MMA fan. You know, I train jiu-jitsu and stuff, so like I like watching MMA. Top 3 worst white belts in the world right now, though. Yeah, Jalen Hurts on the Eagles. Phillies are all right. You know, they're not bad. Honestly, I kind of want the Dodgers to win. I know that's kind of like blasphemy, but I kind of want the Dodgers to win just because I want to see Shohei Ohtani get his ring, man. You know, he's been rotting away at the Angels like Trout. I just want to see Shohei get his ring. All right, market's back up. Again, SPY flat. NVIDIA is still green. Q is actually technically green as well here. What is your go-to submission right now? Guillotine. Followed by, like, specifically arm out guillotine. If they try to roll sideways and go north-south, I'll try to go for a Darce and try to lock that in and then roll them sideways. Or Darce or Anaconda. You know. I'm good at RNCs. I'm weak at arm bars. I'm good at Kimura's as well. Americanas, Kimura's. You know, depends on where I am. She's in Dorado. I know. Listen, man. Trout's making bank over there. I get it. He got his big check, but the problem is that they almost never made it to postseason. And so I feel for Trout. He's one of the best players in the last 20 years, yet he's never gone to the playoffs. You know. I'm just weak at arm bars. Like, mine are never tight enough. You know, I almost always, if I shoot an arm bar on somebody, I'm almost always getting stacked. And they're getting top position. And then, you know, so I just never go for them anymore. No, I sold Disney a while back. I might buy it back if it dips down to like 80s, 90s. Armand versus Makachev. I think it'll be a good fight. They're both good grapplers. I'm okay at triangles, but both arm bars and triangles make you susceptible to getting stacked and side control. Like, you try to throw a triangle, they can duck out of it and get side control pretty easily. Where, same thing with an arm bar. You try to arm bar somebody, they're just going to stack you. So you got to have a really good arm bar, specifically from top control is the best place to do it. It's risky going for them. Yeah, so the ECB press conference is going on right now. And so we're not going to cover it. Here, I got to turn this down. There we go. Y'all can hear the music, right? You should be able to. Let me get this out of the way now. All right, guys. So again, Q, everything's completely flat. I think we might have choppiness today as well. Again, tomorrow we have payroll numbers, and so we might have flat action leading into payroll numbers tomorrow. That's what I'm assuming here. I don't know about non-farm payrolls. I really don't know. My oldest son wants to go to LSU. Man, that's cool. I don't want my kids going to LSU. I'm a big LSU fan. I love my kids. But from somebody who grew up in Baton Rouge, Louisiana, which is about an hour away from New Orleans, that's just not where I want my kids to go to school. It's a rough place now, man. It's gotten worse over the last 20 years too. And so yeah, again, I grew up there. I know how it is. You know, I want my kids to go to like A&M or somewhere, to be honest. A&M's a better school than LSU as well. I'm a big LSU fan. I'm rooting for LSU for sure. But the LSU campus has gotten kind of sketchy, unfortunately, over the last 15, 20 years. All right, guys. So we got about 30 minutes until the market opens, chat. About 30 minutes. Again, if you haven't already, check out Apex. We're going to be day trading on Apex today. I don't know what I want to do here. I guess I want to short in micro contracts here. We got 2 micro contracts, 3 micro contracts here. We're shorting. We'll add 4 micro contracts here. We're not going to add any more to this. See if we get a rejection here. And again, this is like day trading, like very similar to day trading stocks. You can see I'm shorting, buying market, very similar. There's no PDT in futures in these funded account programs like Apex are allowed, where they give you a demo, they test your skill. If you pass the test, they fund you. If you fail, you lose a much smaller amount than you would risking thousands and losing that in the market. I think it just makes sense. Again, here's a look. So we're up $20. Take half of it off, just locked in half of that profit. Bad fill there on the rest, but it's okay. We're going to add a little bit more. We got 3 contracts back. And again, if you want to check out Apex and day trade with me, you can get the 250K challenge for only $18 after tax right now. $18. Again, if you want to check it out, there's the link. Use coupon code BT. Remember, they're a sponsor. I'm biased. They pay me money. I'm biased in their favor because they pay me money. Understand CFTC 4.41, hypothetical or simulated performance have limitations. Chat, all that good stuff. All right, we took out another half here. Just kind of scalping a little day trade with micro contracts, small size. Taking a little too long. Yeah, well, I mean, Baton Rouge as a whole has gotten bad. Like, again, it's my hometown. I love my hometown. Like, you know. But it's just gotten worse over the last... All right, we're going to cut this. So we're up about $31 there. It's just gotten worse over the last 20 years, man. It's like a... It's not a small city. It's not a big city, though, but it's about an hour away from New Orleans. And New Orleans has got this super high crime area. If you grew up there, you understand, you know. It's not the safest place to live. I'm a real estate agent and software developer, Corn. So I'm mostly like a JavaScript, React Native mobile developer. But you know, I'm also a real estate agent. I think I'm still a real estate agent. I don't know. I haven't used it in years. So, and again, I know a lot of people that are just kind of upset about high interest rates. So they're complaining and they want interest rates to drop. But interest rates aren't objectively super high relative to the last 50 years. And I think we need to combat inflation, man. We can't just lower interest rates to try to appease lenders. You know, and real estate professionals, we got to keep interest rates high and discourage spending. like 2 hours north of Detroit. Mid-Michigan is a great area to raise a family if you can survive the winters. Yeah, I've lived in Michigan. Again, my stepdad, he recently passed away not that long ago, is from Sault Ste. Marie, Ontario, Canada. And so I've been in Michigan. My wife's family has a lot of family up in Michigan. You know, but I don't know, Michigan, a lot of farmland, it's nice, but again, even it's not great in a lot of places. Like there's a lot of places I wouldn't live. Yeah, I'm looking at. Yeah, so I'm looking at. Let's see what else we get. Yeah, I know. All right, guys. So Nvidia pulling back a little bit. Again, markets are mostly flat today, and I think the markets might stay flat. Again, tomorrow we have payroll numbers and unemployment data, so I think the markets might stay flat today. I'm not 100% sure, though, but I think we could. You know, I think it's possible the market stays choppy today, leading into everything, because, again, the market could just be flat, boring, neutral. Again, I'm not saying for sure. I don't know for sure. I just think it's possible the market stays flat, sideways, boring today. Because I think a lot of people are just going to be waiting for payrolls to come out. All right, again, market's flat. I'm trying to see if there's any other big news today. Guys, give me a second. Yeah, so again, the interesting thing is, like, so a new hidden video was added to Roaring Kitty's profile. Now, what this means is that we might start to see some spikes based off of the assumption that Roaring Kitty could be debuting a YouTube video and the consequential spike in the potentially consequential spike in GameStop price. I don't know. I think essentially what I'm saying is I think Roaring Kitty has this video. He might debut soon. I can't talk right now. Might debut soon. And if he does, that might spike the price of GameStop, AMC, and other stocks like it. If he debuts some type of optimistic GameStop / AMC video. So do you guys think he's going to debut a video soon, Roaring Kitty specifically on YouTube? Because that's the talk of the town, is that he added a new playlist. Currently, it's hidden right now, so you can't actually watch it. But people are speculating that he's going to be dropping a video soon. What do you guys think? I don't know about Tesla short term. Yeah. Yeah, so like my wife has family that lives like up in Michigan around like Benton Harbor. Benton Harbor's sketchy, dude. It's just sketchy, you know. Benton Harbor's got high crime, you know, a lot of it's hard to even go there. So it just depends. Yeah, maybe. Yeah, I'm sure he's got some lawyers, though. The dude's worth tens of millions. You know, he's got lawyers, I'm sure, on standby. Maybe not, I don't know, but... You know, I hear people say this all the time, right? And I don't necessarily think this is a bad thing, but I think I think it's misleading, right? So I hear people say, oh, well, if you invest X amount of money into the market between years 18 to 65, based on historical average of roughly 10% returns, you'll have $3.5 million if you invest $200 a month. Every month into the S&P or the NASDAQ or the Dow. And I get this, right? What they don't tell you is that $3.5 million is not going to be nearly as much money as you think it is when you're freaking 65. You know, it's not. You know, the other thing is, like, I don't want to spend all that money so I can live good at 65. Like, I understand the point is that this is a retirement thing. But again, $3.5 million in 40 years is nothing. It's not going to be anything. It's going to be the equivalent of, like, it's going to be noticeably less, right? It's going to be noticeably less. And so that's the thing that, like, I hear people say this all the time, like, yeah, you know, spend all your money in savings so you can live really good when you're 65. It's like, I don't want to live good when I'm 65. I want to live good now. You know, at 65, no offense, but my life is, you know, we're going to the end of, like, I think it's misleading. And I think a lot of people feel the same, where they don't want to spend all their time investing money so that they can live good at 65. What's up, Corey? Hey, thanks, bro. It's better than 450K, which is less than most people are on track to have right now. Yeah. I mean, I don't know. I think one of the things that you hear a lot with modern finance gurus and stuff like that. Again, I'm not even claiming to be a good trader or trader finance guy. I'm not even claiming to be any of that. I'm sure a lot of people would agree with that too. But you know, you hear people say save, save, save. I think if you want to live good when you're younger, you got to take risks, regardless of what it is, regardless of whether you're talking about starting businesses, investing. If you want to live good now, you got to take risks. By the time I'm 65, it's going to be relatively insignificant how good I'm living. I'm just going to be trying to spend time with family once I hit that age, you know. But if I want to live good now, you got to take risks. And I think that's something that a lot of these modern finance gurus miss out on. I think their bias is a lot of these guys are 65, right? They're older, no offense. And so, of course, they're like, oh, well, you know, just save your money so you can live good when you're my age. And it's like, that's great, but I want to live good now. And I think to do that, you got to take risks. I feel like I bought that shirt.
It's too small for me.
I feel like I bought that shirt and the Houston Rockets shirt at Target like a couple weeks ago.
No. Whenever I went to Target, you only bought that shirt. I've had this.
All right. I'll allow it. It's all right. I love you. Have a good day. Hey, your brother never came in here. Okay. Yep, agreed. What will I be able to do at 65? Spend my savings on health issues? Right, exactly. I want to live good now. If I got to do that, I got to take risks, you know. If you don't save your money, if you don't invest your money, I mean, you're going to lose it to inflation anyway. And so I believe in investing for sure. You got to hedge against that inflation, but you got to take risks as well. Save your money so you can live when retired, because if you don't, you'll have to work forever. Yeah, but to be honest, I'm kind of a workaholic anyway, and I think it'd be kind of depressing sitting at home with nothing to do all the time. Like, I like working, you know. Yeah, I feel you, Matthew. I agree with that. Propaganda for hedge funds. Hedge funds typically underperform the market, if we're being honest. It's kind of like, it's kind of like if you ever win the lottery, you never take the annuity payments. You always take the lump sum because you could throw it in bonds yourself and make a similar return yourself. Because, again, the lottery hopes you're dumb enough to take the monthly payments. They hope you're dumb enough to do that because then if you don't live another 5 years, they keep everything. And they're like, haha, you know. And so, I don't know. I think people are too worried about long term, but short term, they should focus on that too. Hedge fund managers are living great right now. Yeah, I mean, hedge fund managers, that's kind of like the top. I'm with you, but I do think the average person needs to hear it so that they can get used to spending less than what they make. 100%. Most people live above their means, and I think that's the real problem most people face, is that they simply live above their means. They want to look rich, and so they end up, it's like there's a very famous quote, and it's don't try to look rich, be rich. And again, I think a lot of people are worried about looking rich, and so they end up living way above their means, and that ends up just causing them to not have a very safe future because everybody wants to look wealthy. When really, again, I've said this many times, but the wealthy people that I know wear flip-flops and t-shirts. They do not, like, if it's too obvious, they're targets, right? And they don't want to be targets. If you make enough money, you don't want to be a target. So what do? You kind of, you dress more reserved and quiet. You wear t-shirts and shorts, and you don't, try to flex on everybody. But it depends as well. Yeah. Do you think hedge funds have low returns on their investment because they have multiple holdings in their portfolio? I think most of the time in hedge funds, people make a percentage, and so they have a conflict of interest to take riskier trades than they should be taking because they're worried about commissions to a certain extent. But yeah, very famous quote I've said here before. Riches yell, wealth whispers, All right, guys. NVIDIA down at 1230s. What's the impact of jobless claims on Bitcoin? Is claim is negative, which means dollar will dump and Bitcoin will pump. Please correct me if I'm wrong. Yeah, it's never that predictable, Saeed. It's never that predictable, bro. So again, the impact jobless claims has on Bitcoin is not the most predictable thing. You're looking at it like it's super definitive reactions, and it's just not. It's not that predictable. I'm not gonna say it's completely ambiguous, but it's certainly not easily predictable. Hey, what's up, T4? All right, guys, we got 10 minutes. 10 minutes. Market's very flat. I think we might have choppiness today as well. Remember, payrolls are tomorrow. Unemployment is tomorrow. The strategy I've been using a lot, like, let's just imagine we get a range like this at the opening bell. The strategy I've been using a lot is I've been buying the bottom, covering towards the top on days leading into major economic reports. Because a lot of the time, leading into major economic reports, we get price action like this. You know, so leading into these reports, something that I've been doing a lot is waiting for days that either precede major economic days or wait for the major economic days themselves and attack choppiness ahead of the reports. Because again, a lot of times leading into these reports, we get neutral sideways behavior. And so I'm able to kind of short at the top, cover at the bottom, short at the top, cover at the bottom, buy at the bottom, cover at the top, you know, so forth and so on. Just kind of attacking this rectangular range that we get a lot of the time leading into major reports. And with that said, tomorrow, again, we have unemployment and payroll numbers. And so one of the strategies I'll probably try to implement today is sideways choppy neutral behavior and attack ranges. Again, maybe we don't. Maybe we get big volatility today. I don't know. But that's something I'll probably pay attention to. What do you guys think? Yeah, ECB cut rates 25 basis points. Tesla? I'm in Tesla right now. It's flat on the day, although it had a good day. It had a neutral day yesterday. So again, people are talking about Adobe's new policy of their new terms of service. It requires users to grant them access to their projects for content moderation purposes. I think it's a terrible idea right now. I think Adobe's already in trouble because of AI. I think AI is going to make a lot of digital artists, a lot of digital artwork rendered, like, and specifically the artists are going to be the ones rendered obsolete because AI is going to do everything for people now instead of people needing to use Photoshop. AI pretty soon, within the next year, is going to basically do everything for them. And so with that in mind, I think Adobe should be focusing on keeping people on board instead of like getting more strict with their terms of service and moderation. I just think it's a bad idea for them. Oh, that makes sense. So yeah, Adobe wants to see what people work on to feed their AI. That's probably what it is. Yep, that's exactly right. Okay, that's not a bad idea. I get it. Do I want them to do that? No, but I understand why they're doing that. That makes sense. Yeah, I mean, probably a good move. Again, look, a college major as a designer, like a digital designer, that's a silly major to begin with, brother. No offense to you, like full turn media, but a major in digital design is silly. Why? Because, artwork is very easy. If you want to get a good job at artwork, it's going to be purely based on how well you can do the job, right? Like digital design is one of those careers where if you know how to do it, you know how to do it. It doesn't matter what course you take, what college you went to, what degree you have. If you can design digitally, you'll get hired, So getting a degree and putting yourself in 6 figures worth of debt for that is silly. So you should have changed majors, in my opinion. No offense to you. I just think if you're going to college right now, you got to make sure it's the right degrees. Too many people are getting nonsense degrees, locking themselves into debt for it, and I think it's silly. Yeah, CNC Tech put a lot of businesses out of. Yep. I mean, Netflix is not going to get replaced with text to video. I mean, look, text to video, I'm sure it can eventually get pretty good, but it's not going to freaking replace Netflix. Netflix will probably work with it now, where they'll take the best user created videos and movies and shows and buy the rights to them. So I think that it's actually going to sprout up a number of new career paths for people that use AI to write digital works, to write movies, to write TV shows, to write all these different things, and then sell those rights and either receive royalties from big streaming services or just sell them straight out for a flat fee to these big streaming services. I think that's probably going to be a career path that you see into the future, and it's all going to have to do with how well you can query AI as well as your creativity in your mind as well. So there's going to be a lot of stuff like that in the future, but it's not going to replace Netflix, right? I think that's too simple-minded. I think you got to look at the big picture here and what Netflix is going to do as a reaction to this new technology. And I think that's something that we're probably going to see. Yeah, code is good as well, but AI is going to replace programmers as well. And this is coming from like a JavaScript developer myself. AI is going to replace a lot of it. You still have to learn how to code because sometimes AI, at least right now, it's producing spaghetti code, but it's going to get better. And so it's going to get really good. You're still going to need jobs for programmers, though. It's just going to be more specialized now. NVIDIA spiked up over the VWAP, over the 200 EMA. Programmers need to know how to speak to AI. Kind of. You kind of have to know how to... Programmers kind of need to know how to query AI, but you could also do something like this. All right, guys, we got less than a minute. Yeah. Oh wait, did I put right? Oh, did I put? Yeah. Sorry, Oh yeah, I meant right, but it's all good. It understands what I mean. Claudine, you're actually correct. Again, I typed it too quickly. All right, so here it is. All right, guys, here's the opening bell. Chat, here's the opening bell. Look how accurate it is, too. Buy, boom, buy, boom, buy, boom. Maybe I'll keep this up. All right, guys. Hey, we got 10 seconds until the market opens. But look, I had AI write that in what, 2 minutes for me? You know? AI is powerful. It really is. Here, I'm gonna put GameStop up as well. See what that looks like. GameStop's on the bottom. I'm gonna put Nvidia up on the top. I'm also gonna get rid of this code for now. But my point is, that's how easy it is to produce code now. Again, here's Nvidia on the top, GameStop on the bottom. All right, AMC just spiked up at the opening bell. I'm looking at GameStop here. GameStop's down. Again, we're probably going to attack choppiness today leading into the open. Tesla up over the previous closing price. Nvidia creeping down some. GameStop moving up, though. GameStop up to 32s now, right around 32s. GameStop trying to move up. Nvidia moving down here. I might buy this dip. Again, try to check choppiness behavior. There we go. Took half off. Out. So we just scalped a little bit here. Tesla on the rise at 176. AMC and GameStop rising up. Tesla up to 177s. All right, so we did get a bounce right back up. GameStop up to 33s almost here. Nvidia starting to turn back up as well here, chat. We get to this top of the range, I'll probably start to short, but I gotta wait for it to get up there. Tesla has spiked to 177s. Nvidia spiked up too. Yeah, we're actually green in our portfolio somehow today. Nvidia spiking up more. We'll start to short since we're at the top of the range, but we're only going to take one contract here. We're already about $50 up on the day. We'll add a little bit more to it here too. There we go. All right, we'll take half off there. Lock it out. So we're up about 80 bucks on the day here. Again, we're attacking that choppy range behavior like we expected. And so far since the opening bell, we've kind of gotten choppiness. Although Nvidia is looking pretty strong. So is Tesla. Here, I'll be right back, guys. I'm going to keep trading, but I'll be right back. I got to go to a restroom break here. So I'll be right back, guys. While I'm gone, we'll do bathroom break Jeopardy. Does the market stay flat after the open or move up or down? Answer in chat. All right, guys, we got bathroom break Jeopardy. Does the market stay open? Does the market stay flat like I expected to after the opening bell, or move up or down? Let me know what you guys think. All right, we're back. AMC and GameStop have moved up. GameStop got up to 33.50s. Tesla's still pulling back, but Nvidia is pushing up more. Just broke lifetime highs again. So yeah, so far the Nasdaq has been very flat, very choppy. We're gonna switch to the regular E-mini now, or the regular Nasdaq, since we got a cushion on the day. We'll try to swing, make a little bit more money. Nvidia's pushing up though. Again, very flat open for the Nasdaq and the SPY, which is what we thought we wouldn't get today, even with Nvidia pushing up. Palantir back, is it really? I mean, I don't know. I see it spiking up some. I'm in Palantir. I want it to hold. I want it to keep going. We have gotten a pretty flat open though. We haven't really gotten much. Before we go anywhere, chat, check out one of my other sponsors, a company called Chart Prime. It's a trading view service you can use in stocks, crypto, forex, futures, anything with a symbol on trading view, you can use it. And again, it's just a powerful thing. I can't guarantee you're going to make money. They're a sponsor of mine. I'm biased because they pay me money. So, of course, I'm biased in their favor because of that. But a lot of great ways you can use these tools. Like, look at this range just using the regular market dynamics tool. You can see the kind of rising wedge here. And you can kind of see where it is and see where the tops and bottoms of these levels are. You can also kind of see different symbols there, but like look at the wedge holding here, chat. Like if we look at the buy and sell signals, again, these are some of the most powerful signals you can look at. Like look at the strong signals, but let's just back test this list here. Look at the buy signal, beautiful bounce. This is a 5-minute chart here, so this is like a few hours of price action. This one maybe didn't work. This one definitely worked. It came in here, huge bounce. Sell signal, we got a drop there. Strong signal, we got a bounce. This one didn't work. Strong signal, definitely got a bounce. Look at this sell signal showing up here. Nice little drop. This strong signal showing up right at the bottom here and then getting days of green action, almost days of green action. So again, you can kind of see they're usually pretty impressive, pretty accurate. Look at the strong signals too. Buy signal. Nice little breakdown, and you can see it changes the color of the candles when it's in that symbol as well. Look at the sell signal drop. Look at the strong buy signal bounce, buy signal bounce, sell signal drop. It's not always going to work at any point in time, but back test it yourself. Look at this strong signal showing up here and then days of green action. It's like $40 a month too. If you use my link, you get a big discount here. And you see they have back testers, oscillators, screeners. This is called the Market Oracle Pro and the Market Dynamics Pro. So again, check them out. We're still looking at this buy signal, strong signal there. This one looks like it followed through. This one followed through. This one maybe didn't work, but the other one seemed to be working here as well. So again, check it out. Great way to learn. I can't guarantee you're going to make money. They're a sponsor of mine. I'm biased, but you can check them out here. Yeah, anything with a symbol on TradingView you can use it on. Hopefully FOMC pushes a single rate cut this year. Maybe one rate cut. I wouldn't be mad at one, I guess. I just don't want us to start like... I think one rate cut's okay. I just don't... Look at Palantir fly up, chat. Wow. Palantir's up to 2350s. Looking good. Salesforce flying up too, man. See, I love that buy right there, bro. I bought that dip. I gotta take a little bit more off of Salesforce here. We took a piece off of it, locked it in. I thought it would be a good dip. It's called Chart Prime. You can see the link above me. I can't guarantee it's gonna work. Nobody can, of course. All right, we've had that. What do we say we would get at the opening bell, chat? What do we think we would get here? Choppy behavior. Choppy behavior. I don't think we have any actual news. We got the ECB rate decision and press conference going live right now as well. Lagarde is speaking in about 25 minutes or so. But the press conference is live now. It's so flat though. It's hard to get the top because the range is so small. Yeah, the problem with this, so we've been choppy, but the problem is look at Nvidia dump. Apple's red. Everything's kind of flat. Nvidia's falling. We got one contract here, the regular E-mini. We just scalped about $30 from it. Could have maybe made a little bit more. We're about $100 on the day, a little bit more than that. And we got right back up here. I thought we would get choppiness ahead of this report. Yeah, it's such a sideways range, guys. I mean, I'm up today, but I don't know if I really trust this either. So we got a pretty big pullback down. Part of me wants to buy this dip. Again, we're going to risk what we've made on the day here. We're going to buy it now. Risk what we made on the day. I don't mind doing it. It's kind of a risky trade. I'm going to get out there. So we got out mostly flat. We lost a little bit of money there. I just did not like this huge breakdown. So we were able to avoid losing more somehow just now. But all right, we're short. We're trying to buy the dip again. Oof. Punished. All right, we're going to get out. We're down like $100. I'm going to close this down on the day. I don't want to risk too much. We'll pull up Quant Tower. And see if we can make some money there. And see if we can pull it up. The promo code's just using my link. Look at Nvidia. Nvidia's dumping the market. We got out mostly flat, but Nvidia's what's dumping the market down a lot. Yeah, Nvidia's falling fast. Again, somehow we got out mostly flat in a pretty red day, but we kind of started buying this dip. We ended up actually being green on the day. We're up about 130, but kind of a volatile day. I think I'm just going to sit on my hands right now, chat. I think we'll still get choppiness. Somehow, look, we did make money today. Sometimes I'll pull it off stream if I need to trade with less emotion. I'm still getting used to the crazy big size. And again, if you want to check out Apex, I'll put the link up. We're going to go ahead and close it down. If you want to check out Apex and day trade with me, in this account, we're up thousands, though. So the gains are pretty minor. Today, like in this account, we are currently up about $2,843, and this is an Apex funded account, 50K funded account on Apex. They gave me a demo to get this account. You take the demo they give you, and you take the demo they give you, and if you can make, look, you can see it. It's a $50,000 demo. I made $2,843.54 net right now. So that's my net profit. So I'm up about 3K. I'm probably going to withdraw soon. But again, they give you a demo and they test your skill with the demo account. If you can pass the test with the demo, they fund you the same amount. So this was a 50K account. It cost me like $40 to take the challenge. I made 3K in profit without losing. I think it was 2,500 is the ratio. They give you a 2.5 to 3 ratio is what it is. GameStop breaking highs right now, Chad. Look at GameStop. So again, if you want to try to get funded with me, Apex is one of the most legit. They give you a demo, test your skill. If you pass the test, they fund you, and they paid out almost $200 million in withdrawals. You get a 90% split once you're funded. If you can't pass the test, you only lose what you pay for it. So you lose $40 for the 50K one. Right now, you can get the 250K one for only $16 roughly before tax. Look at GameStop spike though, Chad. GameStop up to 34s right now. When we're in GameStop, you love to see it. Salesforce is treat me right as well. Boeing is good. I don't know if I should sell Boeing or what. We're in Netflix. We're in Nike. Nike's better today too. Uber is up. But yeah, I'm going to get out of here. Y'all be good. Love you all. Y'all have a great day. We'll be back tomorrow, guys. We got payroll numbers, unemployment numbers dropping tomorrow. So be ready tomorrow. It's the biggest day of the week by far. is tomorrow with non-farm payrolls and unemployment. It's the biggest day of the week. We also have the Fed meeting next week, CPI, PPI next week. Next week's a crazy busy week as well. Y'all be good. I love you all. Y'all have a great day. Market's turning. I'm going to close out before I end up giving these gains back to the market chat. I'll see you guys later. Y'all be good. Also, understand, I have no idea what I'm talking about. I might be wildly wrong about everything. Understand CFTC 4.41, hypothetical or simulated performance have limitations. I have sponsors. They pay me money. I'm biased. Y'all be good.